Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
Hello and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, the first week of 2024 turned out to be a volatile one for the markets. In fact, when we talk about the broader markets, they really outperformed the benchmark indices, the Nifty and the Sensex. It was the sectoral rotation that dominated the street as well. The question now is what's in store for the markets in the second week of the new year, which will also be marking the starting of the earnings season of Q3 as well. We will tell you all of it. But first up, the top headlines this hour. Indian blue chips are likely to remain in a sideways to consolidating band on Monday as tepid overseas cues and lack of buying momentum keep the Nifty under pressure. Third quarter results starting later this week will determine direction. Selling pressure is seen at higher levels even in cash stocks as a price-heavy market looks to take a breather after a 7-month rally. Traders are advised extreme caution on fresh longs and stop losses remain critical to protecting trading profits. Good morning to all our viewers and good morning to you, Shail, as well. Like I was mentioning, the Nifty after 7 back-to-back weeks of gains, it's now declined in the last 2 of the last 3 weeks as well. The 22,000 mark on the Nifty continues to remain elusive as the index continues to face resistance between 21,750 and 21,800. What do you think is in store and how will the markets move this week?
Very good morning to you, Sakshi, and to thousands of viewers who are joining us on this excellent, cold, wintry morning in Delhi. Let's just discuss the Nifty first. As you very rightly mentioned, Sakshi, it was possibly the first weekly loss of 2024. Actually, it was the first week, but a minor slip on a weekly basis, just about 20-30 points that the Nifty has slipped on a weekly basis to 21,710, and well, that is not a cause of worry, Sakshi, but the fact remains that the first 1 week was spent in a very narrow trading range as far as the Nifty is concerned. On the higher side we have 21,840 and on the lower side we have 21,500. So this is the broader range, and the fact that 21,680 is something that the bulls are defending with all their might. And as you know, at 21,710 we had a nice decent rally towards the close of Friday, but somehow it was not able to overcome 731, which was the previous week close. Now let's look at the granularity of the market. The Nifty, as we all know, is a component of 50 shares, of which the 10 index heavyweights matter the most. If you look at the advanced decline ratio on Friday, it was favoring bears as far as the Nifty is concerned. So 21 stocks rose and 21 stocks rose and 29 fell. So 3:2 is the advanced decline ratio favoring bears. If you look at how you watch the advanced decline on the index heavyweights, that was a little bit worrisome, because apart from technology, which is TCS and Infosys, the rest of the counters were fairly weak. And TCS and Infosys have risen, as you very rightly mentioned in your headline, that the third quarter earnings start from Thursday, led by these two. So they rose on the back of short covering on Friday, but both of TCS and Infosys are down in this month of January so far. So that's the weakness. And the other part, Sakshi, is that banks, banks are in very bad shape as far as the Nifty is concerned. There is intense selling pressure on the banking side. As far as January is concerned, the private sector banks, except for Axis and IndusInd Bank, they are down on heavy OI addition, which essentially means that there are shorts in the system as far as private sector banks are concerned, as also Bank Nifty. So that's the granularity of the market, and as you said, we've risen very sharply from 26th October onwards till first week of Jan. I think it's time for consolidation. That's seen happening over the last 5 trading sessions. Definitely till Thursday we'll see this flat to sideways phase, and this is what we are looking for. 21,700, 21,650 is a very key support level around the options chart, and the fact that overseas cues are absolutely flat. Sakshi, you mentioned in your market roundup globally that last 5 trading sessions in the US have been actually negative. So it's a weak start for 2024, and we presume that Nifty will consolidate. Let's focus on the cash markets. Lot of information there. We'll leave the Nifty and the Bank Nifty to their doings, sideways to consolitative band. Don't buy the dip. Let the market settle a bit lower.
Absolutely, Shail. Now let's also talk about the Nifty Bank as well. Like you rightly were pointing out also, it ended lower for the week, but the bulls here can take heart from the fact that the index is closed above the 48,000 mark on a weekly basis in 3 out of the last 4 weeks as well. So that's a little bit of a heartening fact. But of course, even in this week, do you expect the larger banks to not really be at the forefront?
Yes, Sakshi, I would imagine, you see the Nifty Bank is in a consolidative phase over the last 4 weeks. There hasn't been much happening. It's in a 700 points trading range, closed at about 48,150 on Friday. And as I have mentioned, the likes of ICICI Bank, HDFC Bank, SBI, Kotak in particular, are in pain as far as the Jan series is concerned so far. Lots of selling pressure coming there, and that's followed by a rise in open interest. It basically shows that short positions are being built up. It's only Axis Bank and to some extent IndusInd Bank that are trying to sort of keep the Nifty Bank flag flying here. But at the moment, I would see at 47,820, 47,900 is the acting support as far as the Bank Nifty is concerned, and resistance of course at 48,350, 48,400. So if you are able to go above 48,400 for some reason, Sakshi, then probably you'll see some short covering and decent moves, but range bound trade on the Bank Nifty. And as you'll detail in a while, the 2 quarterly updates that have come from public sector banks, Union Bank and Bank of Baroda, give no cause for cheer as far as the sectoral fundamentals are concerned, Sakshi. So I'd stay away from the Nifty and the Nifty Bank on the long side, and I'll concentrate my energies on the cash segment, Sakshi.
Absolutely. Anything from the F&O space then, Shail, that you'll be watching out for? Any stocks there?
Sakshi, like I've said, all the updates that we've seen on a quarterly basis coming over the weekend and post Friday close don't give any cause for cheer. Even, the GIFT Nifty is not saying anything. So, maybe some shorts on the Tata Steel side, JSW Steel side. Metal seems to be getting weaker, and that's because the quarterly updates of Tata Steel haven't been enthusiastic. I'm sure you'll get into the details. Even Titan, third quarter sales were not enough to talk about, even though this was, the festive season. So the update they given is fairly tepid. Ditto for Union Bank and Bank of Baroda. So my understanding is Monday will go into, trying to find out basic mood of the market for the week ahead. I would imagine a sideways to flat trade. Lots of stocks in the F&O space are in the ban, which basically means that momentum is still on the long side. Nalco, Balrampur Chini, Delta, Sale, Z Entertainment, these are all in the ban. As far as individual stocks are concerned, Chambal Fertilizers and Bajaj Auto, these are the 2 companies that will hold board meetings today to discuss the quantum of buyback. This is on my radar, Sakshi. How about international markets and maybe a wrap up of stocks to watch? What What are you looking at?
Absolutely. Shell, so the US markets, just like how you said, that they ended marginally higher even though it was a volatile trading session on Friday. The stock futures were little changed on Sunday night after major averages kicked off 2024 with a down week, like you pointed out, as traders look ahead to inflation data, the big bank earnings in the week ahead in the global equities as well. So the Dow, Nasdaq and the S&P 500 just about marginal uptick is what you see from Friday, but on a weekly basis these indices were definitely down. Asia Pacific markets kick-started the week with small gains as well, as investors now look ahead to key economic data and the events in the following days as well. Australia and Japan will release the inflation figures on Tuesday and Thursday. China will announce the trade balance and inflation numbers for December on Friday. Japanese markets are shut for a holiday today, but the rest of them you can see just about marginal downtick coming in. Trends in the gift Nifty, however, indicated a positive start for the broader indices with about 12 to 15 points higher in trade. So that's a bit of a heartening fact. Let's look at how the markets pre-opened. Now the flows are, as far as they are concerned, the FII is bought 1,697 crore rupees cash on Friday. DIS sold about 3,498 crore rupees in cash markets. But for the week, FIIs have bought worth about 3,290 odd crore rupees and DIS have sold about 7,296 odd crores as well. As far as the stocks to watch list is concerned, Titan is something that I'll be watching out for. The jewelry business in December has grown 23% year on year. The business for this one had grown 11% in the same quarter last year. Growth in the September quarter, despite the Shravan and Adhik Maas, stood at 19%. However, growth in the plain gold was higher than studded gold as per a study, and watches and wearables business grew about 21%. Carat-lane business grew about 31%. Eyewear business, however, declined by 3% here. Bajaj Auto will be in focus as the company will be deciding the size and the price of the buyback today. So keep an eye out on Bajaj Auto too. Tata Steel is in focus as the company has reported the best ever third quarter. In business update, crude steel production is up by 6%. So keep an eye out on that one. Marico, of course, the consolidated revenue during the quarter declined in low single digits. The domestic volumes also grew in low single digits year on year. Parachute coconut oil has registered a low single digit volume growth. So there is a bit of a slackening demand. Adani Wilmar has benefited from the elevated demand from the festive and the wedding season. It's recorded the best ever volumes during the quarter. Standalone sales declined by 15% year on year. However, volumes increased by 6% on a year on year basis as per the business update. Bank of Baroda is in focus. Domestic retail advances up 22% at 2 lakh crore rupees. Domestic deposits up by 6.3% as well. Union Bank global gross advances up by 11.4% to 8 lakh crore rupees. Domestic advances up by 10.7% as well. So that's another stock that I'm watching out for. TVS Motors has signed an MOU with the government of Tamil Nadu to invest 5,000 crores in 5 years and employ 500 people as well. Narayana Rudale, that's going to be in focus. IRDAI has granted license to the arm Narayana Health to carry on the health insurance business at large. So these are some of the stocks that I'm watching out for. Let's now welcome our guest on the show. Devarsh Vakil is with us, Deputy Head Retail Research at HDFC Securities. Very good morning, Devarsh. And since you're joining us in the new year for the first time, Happy New Year to you, and hope this year turns out to be a great one for you, for your team and for your loved ones as well. Tell us, as far as the markets are concerned, we've had a volatile start to the new year, but what is your expectation now? Where are the markets headed?
So, Happy New Year to you and Shail and the viewers. 2023 has been a fantastic year for the investors. 24 is going to be a challenging year. I think if I were to sum up the year, volatility and mainly the politics will trump over the economics this year. There are a lot of elections. Political considerations will determine the economic policies, and that's why we have to be a little cautious this year, given the valuations at which we are trading. This week we've seen that after the stellar 23, the US data which has come back after the new year, especially the jobs data, the ISM data, shows that what market had already factored in a rate cut as soon as even the first quarter, that may not happen. And that means the expected decline in interest rate and cost of capital is actually away from now. I think it will happen in second or third quarter. So that should put a lid to the valuation at a higher level. We already know that Indian markets and Nifty is trading about 21 time, 27, 21.7, 22 times FY24 earnings if we were to look at the aggregate earning at about 1,000 rupees per share and about 18 times next year earnings. So the valuations are at a higher level. So it will be important to be stock specific, look at the individual opportunity rather than looking at the Nifty at the aggregate for this year.
Yeah. A very good morning to you, Devash, and a very warm welcome on Business Today television for the first time in 2024. We've seen a fairly tepid trade as far as market is concerned for the first week of 2024, mild negatives creeping into the sector. What are your expectations from the third quarter earnings as far as Dalal Street is concerned? And based on your own estimates at HDFC Securities, which are the stocks that might outperform in the month of Jan?
Right. So the earnings season is starting. We have just started releasing the reviews. IT services, we are looking at on aggregate the companies and the coverage, the YOY, the growth of about 2.8%. So that will set the tone for the earnings season. I think it will going to be a subdued. As a whole, we have released a strategy note for a year where we have come out with some sectors like we have still continue to remain bullish on BFSI and BFSI mainly the larger banks. Apart from that, insurance and capital market players, the PSU banks we continue to like. We continue to remain neutral on IT. Consumer staples, we are negative. Consumer discretionary also, we are negative for the year. Industrial is the one sector, especially the infrastructure side. We are positive as far as oil and gas and automobiles are concerned. We are positive. The sector where we are looking for opportunities this month, as you asked, is in the pharma sector. I think pharma is the sector where after 2 years of tepid growth, the US side, the regulatory concerns are abating. The price fall has now got arrested. And the local side, the domestic side, companies are growing like an FMCG company. Decent margins and ROEs are there. So pharma is the sector which hasn't performed now for last couple of quarters. And I think this quarter and this month, it's a defensive bet, but I think they are likely to be in the limelight. So my focus is on the, pharma for this month.
Okay. Mr. Vakili, any particular stocks that you'll be watching out for that you can list out if you've come out with a list for 2024 stocks, maybe in a positional to medium to long term basis?
So we have actually come out with a strategy where we are asking our investors to do an SIP in 12 times in a month, monthly SIP for stocks. And apart from that, we are also recommending investors to look at individual absolute return strategies from time to time. Recently, we have come out with a report on small cap called Sagar Cement. Indian Bank is the one which we are releasing. Sharda Motor is the one. So these are the small caps where we are recommending individual stock-specific opportunities. Larger stocks like Axis Bank, Larsen and Toubro, Grasim, Ultratech Cement are the sectors where Sun Pharma, where we are asking investors who are longer term oriented can do a SIP this year and gradually accumulate this large cap over the next 12 months. The dollar cost averaging or the rupee cost averaging should work for them.
Okay, so you mentioned from the large caps basket, Axis Bank, L&T, Grasim, Ultratech Cement, Sun Pharma. And in the mid to small cap stocks, you've mentioned Sagar Cement, Indian Bank, which is the third one that you mentioned?
Sharda Motors. These are the small ideas which we have recommended. These are absolute return ideas where the entry and exit are very important. So viewers will be advised to look at the prices, entry prices before entering.
Okay. You've not mentioned any of your IT names over here, and IT is the sector that's now going to be kickstarting its earnings. How would you be placed on the IT names, both large caps versus the mid caps? Is the mid cap IT firms that have definitely outperformed in the year gone by? The large caps are still lagging behind. But do you think that this earnings will share with us a picture that could be better than before?
No, I think this quarterly result season will be a disappointing one for the most of the IT companies. In fact, we were quite bullish, contrary to the street, on some of the mid-cap IT companies like Zensar, Nucleus, and Newgen others last year. We had a buy rating, hardly any buy rating on IT stocks list I can see now. One odd L&T, LTIM, the L&T Mindtree is the one where we have buy. Other than that, TCS, Infosys, HCL Tech, where we have a ad rating. So I would wait for about 5 to 10% fall before making them a buy or entering into this one. The valuations have run up so much and earnings have not gone up. So the current positioning is little cautious on IT sector.
Okay. Devash, let's discuss the numbers that have come in from Titan, Bank of Baroda, and Union Bank. Both public sector banks haven't come up with any decent third quarter updates. The CASA ratio, deposits haven't grown much, about 6.5% in the case of Bank of Baroda, and credit growth is also tepid, 10.6% as far as Bob is concerned. Do you think the public sector banking space, apart from SBI, looks overstretched given the valuations and the run-up?
So you're right, they have run up a lot, but I think there is still some room for investing there. As you mentioned, we like SBI in the public sector bank, and we'd like to stop there right now. We had been bullish on many of the PSU banks, but I think we will wait for the quarterly results, and after that we will review and we come out with the newer recommendations on the compared to the PSU sides. In fact, some of the large private sector banks like Axis Bank and ICICI still give us opportunity where we have about 5 to 10% upside this quarter left. Stock where we are right now, the maximum upside we see from the private sector side is on the Federal Bank. The kind of technology and the fintech tie-up they've done, the kind of strategy brick by brick they are executing, I think it has a room to become a larger bank or a prominent bank. We take Axis, ICICI, Kotak, and HDFC Bank considered are the large cap banks or the prominent banks of India. If I were to put my money on some banks which will eventually become much bigger than what they are right now, our bet is on Federal Bank. So we have about 156 is the price, 150, 190 is the target for shorter term. So I think one can look at Federal Bank in the banking side if you were to invest. But as I have mentioned, the market positioning is such that it is better to gradually enter these stocks and time your entry gradually.
Okay, what we'll do is we'll take a very short break here, Mr. Vakil. When we return, we will focus on the pre-opening action and some more stocks that we will be discussing with you. Stay with us, viewers.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back. You're watching Market Today. I'm Sakshi, with me is Shail, and also with us is our special guest, Devash Vakil from HDFC Securities. Devash, tell us your view on Titan after the business update that we've got. And there's also a Morgan Stanley report with the target price of 31.90 and an equal weight rating on Titan. Quickly.
reduce rating or a sell rating on the company. We think that the valuation, the numbers are good, but we are a value investors. We want valuation to be on our side, and this prices it looks expensive to us.
Okay, let's start focusing on pre-open trades. Remember, there are flat cues coming in from GIFT Nifty. There's nothing much to talk about. A 17-point slide on the Nifty. If you take the view of where the GIFT Nifty is, remember, all of last week there was flat to consolidating trend on the index. Okay, let's start, ladies and gentlemen. It's a downtick of 100 points on the Nifty, 21,616. I am sure this will improve for the better. There are no such reasons for this kind of a downtick. Okay, we'll pay attention to what is happening in the pre-open trade. Reliance 0.7% higher, 26.27. We are focusing on index heavyweights. Infosys is 0.5% higher, now completely flat, 15.31. And let's look at HDFC Bank. This is going to improve. This is not the right price, 4% lower, 1600. This will improve for the better. Okay, now what is sticking in the green? Now this is very important. Tata Motors, the momentum continues, 1.3% higher. It's 801.80. Remember, Tata Motors is among the 8 Nifty stocks on Friday, which hit a record high. SBI 0.5% higher, 646. I want to see what private sector banks are doing on the corporate side. 0.5% lower on ICICI Bank, 988. Axis Bank is opening in the green, 1139, 0.2% higher. Let's look at Kotak also. Remember, this is the top banking loser in the month of Jan so far. Kotak at the moment is 1850, doing nothing. Okay, let's focus on FNO minus index heavyweights. The Nifty has now improved, 32 points higher, 21,745. Top gainers as far as the FNO is concerned, mid cap IT going strong, Coforge 2.4% higher, 62.22. No let up in NTPC. It was a record high on Friday. Fresh record high in the move, 320, 1.6% higher. The power sector is in good shape. You have buying returning to Nestle, 2% higher, 27.25. Remember, the stock adjusted for a 10-for-1 stock split on Friday. Okay, this is good. Tata Steel, Sakshi, despite the tepid third quarter update that the company has given, 2% higher, 136.35. This is looking good. DLF 1.5% higher, 764. The Nifty 21,754 as far as prices are concerned, 45 points higher. A very quick look at NSE 500 and then we'll focus back on Mr. Vakil. Okay, Spark, the last week's rally at the moment continues, 426, 1.3% higher. What else is sticking? Let's look at the most active counters, because the ones as far as prices are concerned are Marico. A weak third quarter update, the counter is opening 2.9% lower, 530. Ditto for Godrej Consumer. The FMCG third quarter updates haven't been good to talk about. 1180 for you, 3.27% cut on Godrej Consumer Products. Sakshi, this is what we have so far. The good point is that about 7 index heavyweights are opening in the green, led by Tata Motors. Reliance is in the green. HDFC Bank has flattened out, 0.34% higher, 1677. And I'm looking at Infosys and TCS for today, because the ramp up will start for Thursday when both of these will declare earnings. TCS flat, 37.37, and Infosys is again flat, 15.32. A flat Monday as far as pre-open trades are concerned. Let's get Mr. Vakil back on screen. Let's take his view on the cement sector. Suddenly we find this back in action, Devarsh. Any picks from this space which might sort of make investors happy? You've already marked Sagar Cement in mid cap. What do you like in large cap?
So for a longer term portfolios, for a quality long term holding, I think Ultratech 30% kind of a market share is a clear buy and a long term hold for the cement company. As such, we are actually quite bullish on a cement as a sector. We have whole host of companies where we see absolute upside between 10 to 15% this year. We have our institutional research have come out with a buy rating on ACC, Ambuja Cement, Dalmia Bharat, JK Lakshmi Cement, Star Cement. I've already mentioned, and Ultratech is the market leader. Apart from that, Birla Corp and Nuvoco Vista are also where absolute upside is much higher. So these are the companies where out of this, one or two can be picked by the investors and keep it for their portfolio over the longer term. Percentage wise, I see about 10% upside in Dalmia Bharat and ACC, and about 25% upside from Nuvoco Vista from these prices. So these are the some of the stocks where we are bullish for the cement pack, and as a whole, we are giving a larger weight, an overweight weight to cement in the portfolios compared to the index and benchmarks.
Okay, you know what, we are just getting data from FADA, which is sharing that 21% of an overall retail sales growth in the auto sector is what they have witnessed, with three-wheelers clocking in 36% growth for the month of December, two-wheelers clocking in 28% for the month of December, passenger vehicles just about a 3% uptick, and commercial vehicles just about a 1.3% uptick. Mr. Vakil, what would you say on the entire auto pack looking at this data, and what is your sense? Are you looking at more two-wheelers to add in this current realm?
So entry-level cars and the less than 125cc two-wheelers sales have remained little soft due to the rural sluggishness. There, the gradual recovery is expected because of the rural welfare programs which government will support, and that will start the spending at the lower bottom of the pyramid section. The higher-end vehicles and the product mix companies product mix in favor of larger and higher value vehicles have done well, and there the aggregate demand will remain healthy for the year. So one of the bets which we have taken aggressively recommended it is the TVS compared to the others. Longer term, not shorter term, I've been of the opinion that the compared to Hero Motors and the Bajaj in the index, TVS will eventually come into the index. So that's where we have bullish bias. Ashok Leyland and companies like Hero Moto, where now we have reached a level where we have a sell rating. Mahindra and Maruti, some of the agri side VST dealers have been the auto sector picks from our side. Overall, I'm expecting as the elections are nearing, entry level vehicles should do well, and companies who are supplying to them.
Okay, fair enough. So that's as far as the view on the auto
Let's
space is
mark
concerned.
a couple of
Yes,
stocks.
sure.
Let's look at the PSU pack stocks that are moving fairly sharply. SGVN has an order inflow 1.8% higher, 9650. NHPC 1.2% higher, 7280. Hind Copper, which is out from the FNO ban, is now quoting 1.2% higher, 2286.70. I'd like to mark Bank of Baroda as well. This is, remember, the top FNO, the top PSU loser today, 1.34% lower, 231.50. Tepid third quarter update they've provided to the bank, to the government of, to the exchanges. What else is moving? Defense. Sakshi, a strong move likely to come in defense. Remember, we'll keep Cochin Shipyard on our radar. This is going X-split 2:1 on Jan 10th. This will be watched. HAL, Hindustan Aeronautics 0.6% higher, 3,017. We are just waiting for Mr. Ashish Chatramota from JM Financial to be ready with us. We'll be paying attention to his stock picks. Sakshi, just a moment on high beta. Let's look at what's moving in that particular space. We have a strong move coming on Indian hotels. Remember, domestic hotel stocks will do well. We've had a blowout between Lakshadweep and Maldives over the weekend, but pay attention to Indian hotels, 461.25, 1.1% higher. And there is this MSCI small cap rejig about to happen, Sakshi. Two stocks to be kept in mind. There is the possibility of IREDA and RR Cabel to be included in the MSCI Small Cap Index. This is, of course, research provided by Nuvama Quant, and these two stocks also need to be kept in mind. Sakshi.
Okay, yes, and on the top movers as far as the markets are concerned, on the Nifty, Titan tops the charts right now, 1.5% higher. Tata Steel follows, 1.2% higher. Tata Motors up by 0.9%. So it's the Tata Group stocks that are forming the top 3 gainers or the top 5 gainers on the Nifty in the pre-opening space. You also have stocks like JSW Steel, Cipla, ONGC and Axis Bank as the other top gainers as well. Now, as far as sectoral movers are concerned, I'm looking at consumer durables now picking up pace in trade today. Apart from metals, these are the two sectors that are among the top movers. And of course, it's the Titan that's been the Titan stock that's been the driving factor over here. Crompton Greaves Consumer, Blue Star, Whirlpool, all of them in slight action coming in. From the consumer durables pack, Mr. Vakil, do you have, all right, we have Ashish Chaturmota now. Let me just introduce him as well. I think he's with us. Ashish Chaturmota, ED and Fund Manager at JM Financial Services with us. Very good morning to you, Ashish. Good to have you with us on Business Today TV. Tell us, what's your sense on the market opening so far? We are looking at stocks like Titan, Tata Steel and Tata Motors, even, the Tata Group stocks really hogging the limelight as far as the Nifty is concerned. Your own sense of where are we going to see the markets headed this week?
Good morning, Sakshi. Good morning, Shailji. So I think, see, broadly markets are in a very strong uptrend. Although if you observe in the last couple of trading sessions, there is some amount of consolidation which is happening at a higher end. But also we need to understand, if you look at from a positioning perspective, I think the aggressive longs are missing at a higher end. So this gives us a sense that maybe markets might remain in a broader range between 21,500 to 22,000. But overall the bias is positive, and I think any kind of dips should be looked as an opportunity to get to go on the long side. But I think stock specific, sector specific, there are very specific trends which are getting built up. So first of all, from a defense perspective, we have been very constructive about this space, and I think going forward also we will see strong trends emerging in the space, because if you look at the bill to order book ratio for most of the companies, they are in a very strong shape. So let's say, for example, a company like Bharat Dynamics, almost 9 time bill to book ratio. Same is the case with Cochin Shipyard, almost 9 to 10 times kind of bill to book ratio. So I think with these kind of strong order book positioning, one can expect 15 to 20% kind of top line growth. And since the tailwind of the sector is extremely positive, we have seen that government has indicated that almost 70% higher budget for defense would be there in the next year, and this gives us a very good indication that next year also we are going to see very strong order book momentum for most of these companies. So I think our preferred bet in this basket after a long, so we have been talking about Bharat Dynamics and other stuff. So I think, but at current levels, I think Cochin Shipyard is one stock which looks promising. My sense is technically also stock has a very strong support around 1300 levels, and if we continue to hold these levels, then I think there's a possibility of 1750 to 1800 kind of technical levels getting tested in Cochin Shipyard. And as a disclosure, the stocks we have discussed on BDL, Cochin Shipyard, this we are holding in our core portfolio, and we believe that these stocks, the tailwind will continue to support the positive uptrend in these stocks. Second, again, I think is the power space. So again, very promising space. Almost we are talking of the 178 gigawatt renewable energy going to almost 500 gigawatt in next 7 years, which clearly means that almost 17% kind of capacity CAGR growth we are going to witness in the space. Within this space, I think there are many names we have been recommending, right from NTPC, SJVN to a smaller cap companies like Inox Wind and Inox Green. But at current levels, my sense is SJVN is one stock which is gaining a lot of traction. So from their current capacity of almost 2 gigawatt, they are targeting almost 12x capacity from current levels in next couple of years. And this is despite having a very strong balance sheet. So this is not going to change the dynamics of the balance sheet. They at any point of time they are going to maintain almost 1,000 crore kind of cash in the balance sheet, and this gives us a very good comfort in even after a very stellar up move which we have witnessed in SJVN. So my sense is, from a technical perspective also, the stock has formed a very strong base around 90-92 kind of trajectory. If we continue to hold these support levels, my sense is 125 to 130 could be the potential possible, technical projections which could be seen in SJVN. Again, a disclosure, we continue to hold, long position in SJVN in our portfolio. And last but not the least is the entire NBFC space, where my sense is after a long consolidation, we are now witnessing strong signs of signals. So within that, I think Poonawalla FinCorp is one stock which we believe can do extremely well, with 35 to 40% kind of AUM growth expected in next couple of years. ROA of more than 4% is and a net NPA below 1%, with a very strong parentage and a fintech model, gives us a very strong conviction that Poonawalla FinCorp will continue to do well, despite trading at almost 3.8 to 4 times price to book value.
Right. A very good morning to you, Ashish. We'll just pay attention to the opening quotes and then come back to you shortly. The Nifty's opened 11 points higher, absolutely flat, 21,723. These were the cues that were coming in from GIFT Nifty as well. Let's look at the index heavyweights. It's a red tick on the Nifty Bank, 114 points lower, 48,050. Red tick on IT and a mild green tick on the NSE 500. Okay, ladies and gentlemen, market watch for you. Let's look at what Reliance is doing. In the green, 2610, but flat. Let's look at HDFC Bank. Flat, 1680, mild red tick. What are the IT stocks doing? I want to see what Infosys is up to. 0.8% lower, 1520. Remember, Infosys and TCS were the top gainers within the Nifty space, IT space on Friday. TCS, 0.5% lower, 3725. Nothing much happening there. What's gaining ground? An upgrade on L&T, 3548 for you, 0.7% higher. No stopping Tata Motors, 798.75, about 1% higher. Axis Bank and ICICI Bank are in the green. Now this is really important. 1141 for Axis Bank and 997.50 for ICICI Bank. Okay, FNO minus the index heavyweight top gainers. DLF taking it away, 2% higher, 768. Hind Copper out of the ban in FNO, 1.6% higher, 287.85. Titan gives you third quarter updates, fairly tepid, but stock doesn't care. 1.35% higher, 37.57. Okay, very quick look at NSE 500. Alok Industries 8% higher, 34.95. Olectra Green, this is the EV bus maker, no stopping that. Fresh record high, 4.5% higher, 15.17. Narayan Hirdale 12.48. They are opening an insurance subsidy, 2.5% higher. Very, very quickly, let's look at the PSU pack. I want to see what Bank of Baroda is doing. It's the top loser in the PSU pack, 2.5% lower, 229. The companies come up with a fairly tepid third quarter update. Ireda 0.5% lower, 104.55. What's gaining ground? Okay, HPCL 2.2% higher, 429.35. Strong move coming in. SGVN 1.3% higher, 96. BEML, BHEL, Shipping Corporation, all up between 1.5%. What about defense? This is something I'm looking at. Let's look at Cochin Shipyard, 0.3% higher, 1366. How about HAL, 0.2% higher, 3004. Okay, ladies and gentlemen, this is how the market has opened, 25 points higher, 21,735 as far as Nifty is concerned. Over to Ashish Chatramota. Ashish, very quickly, anything out of the ordinary that catches your eye in pre-open trade?
So I think, see, as I mentioned, SJVN is something which we continue to believe is a very good story, and I think stock is consolidated for last 3 weeks. My sense is now there is a strong possibility stock entering into a three-digit mark and eventually moving towards 110 in a medium term and positionally towards 120, 125 kind of trajectory. So this is one stock which we like. In the NBFC space, as I mentioned, Poonawalla FinCorp continues to remain our top pick, and my sense is, technically speaking, this is a good consolidation breakout after good 5-6 months. So there is a strong possibility stock eventually moving towards 540, 550 kind of trajectory. So these are the two names from the from the mid cap, large mid cap kind of names, which looks quite promising at current levels.
Okay, a lot of stocks and a lot of things that are moving in trade as far as the opening is concerned. Ashish, let me take your view on the oil and marketing company stocks like HPCL, BPCL. How are you looking at the momentum built up over here? Last week also they were in momentum. They've hit record highs in the recent past again, and we are looking at all three of them up in the trade in the F&O action. All of them up by 2.5, 3% higher in trade. And from the upstream majors, it's ONGC that's hogging all the limelight in the Nifty stocks. How would you look at these both spaces?
So I'm very constructive about the entire public sector undertakings as a space. We have been talking about stocks like NTPC in all our discussions in last 3-4 months time frame. We have been talking about defense as a theme, and we have been very specific about the public sector basket by buying the CPSC ETF, and we'll continue to believe that the CPSC ETF is a better way to diversify your risk and also ride this entire trend which is emerging, whether it is in power or oil or oil marketing companies or defense as a basket. So I think that is that this is one pocket which continues to will continue to do well. Rather than betting individually on ONGC or HPCL, I would like to prefer my positioning in CPS ETF, which is currently quoting around 68.86. My sense is again this is in a uptrend and has formed a strong base around 66. If we continue to hold above these levels, then a trajectory towards 75 to 78 could not be ruled out in short to medium term time frame.
Okay, let me bring in Mr. Vakil on the conversation as well. Your own thoughts on the entire oil and gas space is concerned. How are you positioned here?
Right, so the immediate on Sunday, Saudi Aramco has cut the crude oil prices for all the region, including the largest market, Asia, by about $2 a barrel. And that moves comes because the weaker global oil prices and increased production from the producers outside the OPEC. So the cartel is not able to meet their targets and they are cutting the rates. And that is the reason why we see the oil marketing company in some limelight today. But I think this is a temporary 1 or 2 days phenomena. Overall, in oil and gas, we like the space. Oil and gas is a sector. We have GAIL as one of our picks for 2024 longer term. There is as we know, the gas economy is now becoming quite lucrative for the players. The oil and gas sector as such, we have a positive outlook.
Sure.
The sector to bet on them is the CGD side. So that's where we are thinking. OMC may perform better on the back of a lower crude and unchanged these oil and diesel retail prices, but eventually prices are cut because of the political consideration. The problems, the margins can come under pressure. Refining margin have been healthy, but the overall I'm a little circumspect on this. Downside risk to industry is the extension of the overall the cut in the global demand side.
Sure.
That's where I'm worried.
Sure. All right. Ashish, a lot of buzzing spaces here. I want to ask you on the auto ancillary pack. We've been focusing on auto stocks before, but what about, stocks like the EV theme? That's clearly the one that's making all the news headlines right now. If you look at stocks like Electra, Green Tech, fresh record highs for that one, JBM Auto, Uno Minda has emerged as one of the consensus picks of most of the analysts who've come on our channel last week. How would you look at this entire auto ancillary basket and your pecking order, your top stocks from this space?
So we also, Sakshi, continue to believe in Unominda's story, and we believe this is one stock which has a capability to compound at double digit in terms of top line, in terms of profitability growth, and with more contents, they are going to deliver. Ultimately, this is going to be a big operating leverage for a company like Unominda. And again, the stock has consolidated for a reasonably good period of time. Ideally speaking, if you look at from a longer term perspective, this is good 1.5, 2 years kind of consolidation between 650 to kind of 500 kind of trajectory. Now we have been consistently trading above this long term consolidation zone. So my sense is the stock is moving towards 800, 850 kind of trajectory. So my preferred bet in the entire auto ancillary would be stock like Minda. And even we would like to think that stocks like TVS Motors would be a very big beneficiary of this entire transition in towards EV. And my sense again, this stock has consolidated for last 5-6 months. So I think here this stock could be looked as a good opportunity. Again, a disclosure: we continue to hold our position in TVS Motors in our portfolio. Technically speaking, 1950 is going to be a very strong support, and if we continue to sustain above this, then 2150, 2200 could not be ruled out in TVS Motors.
Okay, ladies and gentlemen, let's pay attention to what the Nifty is doing. It's tested yesterday's low, which is 21,710, and from there it has shot up very rapidly. You have 21,760 on the cards. The first resistance is 21,763. It's most likely to move up. The Bank Nifty has also recovered very smartly from day's low, now down just 26 points, 48,131. Sakshi, it is so cold here that my feet are freezing, but the markets in fact are doing pretty well. Let's look at the high beta space. Paytm, very smart recovery happening on Paytm. It's at the moment trading at almost as far as Paytm is concerned, 700 rupees. Smart block deals happening there over a long period of time, and it's big boy Reliance which is pulling the Nifty higher, 2629 in front of you. Let's look at Reliance's contribution as far as Nifty is concerned. Okay, it's the top contributor, 20 points out of 44, which means a 50% contribution in Nifty's rally is because of Reliance. The rest is ICICI Bank, L&T, Titan and Bharti Airtel. On the losing side are TCS and Infosys. That's a bit of a worry, as also Hindustan Unilever, Bajaj Finance. What else is buzzing in front of us? Nothing much to talk about as of now. Okay, Paytm has a lot of block deals in the system, as also Motherson Sumi. Ashish, your view on Motherson Sumi? This is of course Samvardhana now. There was a very sharp uptick all of last week. What are the medium term charts on Samvardhana Motherson telling you?
So, I think Shelbhai, it has already, crossed a March 2022 high, and almost a good, 15-18 months kind of consolidation breakout, which has happened in Motherson Sumi, which is Samvardhan Motherson. And I think now, if you look at the medium term charts, there is a very strong breakout which has happened above 99. So this 99 will act as a very strong support in the medium term. Keeping this in mind, I think there's a strong possibility of stock moving towards 120 kind of trajectory. So good 15 to 18% kind of upside from current levels could not be ruled out in next 3 to 4 months time frame in Samvardhana Motherson.
Okay, I'll also mark the record highs. Remember, we've been keeping an eye on the entire defense pack, and within that you have BEML, which is at a record high. That is an interesting stock to look at. Very quietly, this stock has moved now at about on a volume of 3,58,000 shares, 5.6% higher, 3274. A strong move coming in on the auto ancillary pack. Electra Green 6% higher, 1546. JBM Auto 5% higher, 1782. This is something interesting. Ashish pointed out Poonawalla FinCorp 464.25, 1.2% higher. Titan, despite everything, Sakshi, fresh record high. Adani Ports, fresh record high. So the overall theme is doing pretty well. Your view, Ashish, on Exide Industries, another one of those auto ancillaries that has done phenomenally well in the last 2-3 months. 328 record high.
Yes, so this stock, after consolidating for last 5 years, is at a fresh all-time high, and this is pretty good in terms of volumes also. Clearly indicating, there's a lot of bet on the battery side of the business, and that's where Exide is buzzing. My sense is after this 5 year of consolidation, now there's a very strong support around 300, 310 kind of trajectory. If we continue to maintain this, then I think this trend could ride towards 360, 370 in the medium term. But positionally, it looks very promising because this is a very long-term consolidation breakout which has happened in Exide after good 5 years. So I think any dip, again, this would be a good opportunity to go long into the stock. So all in all, looks quite promising.
Okay. Let me mark some of the stocks in the realty space. The Nifty Realty Index is going strong after a 7.5% surge last week. The index is back up about 0.5% higher in trade. It was trading a while back 1% higher, so some profits being taken off at the higher levels. But stocks like DLF, Macrotech Developers, Phoenix Mills, Prestige Estates, they're all buzzing in trade. Mr. Vakil, your thoughts on the entire real estate space and how are you positioned here?
So they have done phenomenally well. We come out with a sectoral buy on November and we gave about 20-25% higher targets. I'm afraid all these targets have achieved, though we have a buy rating, but the targets are even 5 to 10% lower than what we had envisaged. So we would wait for the quarterly results. Overall, we are quite bullish on the sector. The cycle has turned last couple of years. The cycle is likely to continue for next couple of years. The real estate is a sector which has impacts a lot of other sectors. So once this sector does well, it has a chain reaction in the economy, and that's why we are seeing that a lot of buoyancy in the ancillary sectors related to real estate. So we are bullish on the sector, but current market prices doesn't leave any room for the short term. So I'll wait for the quarterly results, this recent announcement, and then review and come out with a fresh recommendation. Most of the ones which we had like Brigade, DLF, Godrej Properties, Kolte Patil, Oberoi, Prestige, Sobha, all of them have gone past their recent targets.
Okay. Well, on that note, thanks a lot, Mr. Vakil, for being with us on this special edition and sharing all your thoughts and ideas among market sector strategies and stocks as well. We'll get you back again on Business Today TV. Ladies and gentlemen, we'll take a very, very short break right here. When we return, we'll speak to Ashish more about the stocks and ideas he's focusing on. Stay with us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
Welcome back on Market Today. It's a fresh start on Monday. Remember, the last week, which was the first week of 2024, ended on a bit of losses as far as the main two indices are concerned, the Nifty Bank as well as the Nifty. Today, flat trade again, nothing much happening on the Nifty. Slips back again, 21,710 in front of you, and nothing much on the Nifty Bank as well. Let's look at the broader markets. We've had the first 15 minutes of trade. Let's look at what the indices are doing. We track 19 for you. Today is a day of consolidation and some profit booking, and this is led by the Nifty PSU Banking Index, 1% lower, 5776. Remember, Bank of Baroda and Union Bank came out with tepid third quarter updates as far as their performance is concerned. Both growth in CASA and growth in credit have been muted, and that's the reason why the Nifty PSU banking basket is the top loser. Ashish, coming to you, you've been one of the earliest guys in the market to pick out this PSU banking theme. I remember looking at the CPS the Nifty PSU banking ETF at somewhere like 28, 29, 32, 33 rupees. Now, of course, it's more than doubled. Is the value fully priced as far as PSU banks are concerned, or are there still pockets of hope when it comes to the medium term projections? What are your top picks in this sector?
So the good part is, Shalji, the tier one PSU banks are still looking very promising, whether it's SBI, Canara, or Bank of Baroda. And I think if you look at from a credit growth perspective, these stocks clearly indicating almost 17-18% kind of credit growth could be witnessed. Asset quality is in a very, very strong shape. And even from a valuation perspective, these stocks are trading around 1.1, 1.2 times price to book. Obviously, and with a very strong kind of credit growth, we expect because of the corporate capex coming back into play. We believe that this PSU bank BCT are predominantly being driven by tier one PSU banking names. I think it still looks very, very promising. And I think any dip, so maybe because, if in a market correction, if these PSU bank these ETF corrects towards 62 kind of trajectory, that would be a very good area to start accumulating on the long side. Structurally, we believe this index is moving towards 75 kind of trajectory. But yes, I think since markets are looking little tired, so there is a very strong possibility you'll get a good dip, and in this dip you can start accumulating this ETF as well. So my sense is, from a technical perspective, 62 would be a good area for to start accumulating this PSU bank BCTF.
Okay.
Okay, that's the view coming in on PSU banks. Sakshi, 2 or 3 themes have started picking up. Of course, we've caught defense fairly early. Now it's the turn of Mazgaon Dock and Cochin Shipyard to show their magic to the market. Mazgaon, of course, is trading at 22.25, down about 1.64%. Cochin also sort of moving up as far as the theme is concerned, 1338. It's moved up sharply from its day's low. What else is ticking? There's a company called Pondy Oxides. This is something that needs to be watched. That's because it's up 20%. It's a rare, my apologies, this is some other company. Sakshi, what are you watching? There is a lot of movement happening in HPCL.
Yes, Shail, of course, the oil and gas space has been buzzing, and it continues to be one of the top movers in the F&O space. Apart from the oil and gas space, what I'm watching out for is the entire travel tourism space that's been buzzing. Of course, we mentioned how over the weekend there's been a big debate on Lakshadweep versus Maldives. Ashish, are you looking at the entire travel and tourism space as well? Stocks like Easy Trip Planners, GMR Airports, IRCTC, they're all flying away in trade, even Indian hotels for that matter as well. And of course, tourism has been a space that's really picked up strength after COVID-19. How would you look at afresh in this entire pocket, and where do you see maximum conviction in?
So we have been quite constructive about a stock, IRCTC as a stock pick, and I think we've been talking about the stock since 750 in the recent last 2 months time frame. My sense is this stock structurally looks very, very promising, and after consolidating for good 2 years, I think there's a very strong possibility we might see a strong price volume action coming into IRCTC. Technically speaking, I think 880, 870 is a strong support area, and positionally it looks like 1100 is a very strong possibility in IRCTC. We are trying to also play this entire tourism sector through hotel sectors, and within that, I think we've been talking about 2-3 mid cap hotel names. One of them is Chalet Hotels. My sense is this stock is looking quite promising and have done very strong capex. So I think with the average of room rates rising, occupancy rates are also improving a lot. It gives us a sense that Chalet Hotels, Lemon Tree Hotels, these are the names which will continue to do well. So within that, I think Chalet Hotel technically is forming a very strong higher top, higher bottom structure. And keeping this in mind, I think 640, 650 is going to be a key support zone for Chalet Hotels. and it looks like we are moving towards 780, 800 kind of trajectory from a price projection perspective in Shell Metals.
Ashish, the markets are slipping away. The Nifty is now in the red, 21,682, 0.13% lower in trade. The top stocks that are contributing to this fall, of course, it's the heavyweight counters, Bajaj Finance, ITC, Britannia, that is down in trade. HUL is down in trade. You have also stocks like LTI, Mindtree that are coming under pressure, Infosys, State Bank of India. Kotak Mahindra Bank, HDFC Bank is down in trade as well. So some of these heavyweight counters are really pulling the markets down as far as the benchmarks are concerned. Sectorally also the action is turning weaker. We only have oil and gas, realty and the auto stocks that are still hovering above the flat line. But it's the PSU banks that are now down by 1.2%, FMCG down a percent downtick, half odd percent downtick for the broader market, small and the mid caps as well. IT is down in trade, half odd percent, healthcare and private banks, Nifty Bank, all of them down in trade as well. Ashish, what do you make of this sudden slippage? Do you see that strength is lacking at higher levels on the Nifty even now?
Yes, so Sakshi, this is what we mentioned in our opening remarks that markets are missing strong position of additions at a higher levels, and this could be the possible reason why market should consolidate between 21,500 to 22,000 trajectory, and that's why we mentioned that now when whatever positions we want to create, it should be basically buy on dips kind of opportunity rather than getting aggressive at current levels. But yes, structurally we are quite positive about the market, and that's the reason I think any dip towards 21,500, 21,450 would be a good area to initiate any kind of long positions. But yes, definitely my sense is markets are missing that strength, that kind of positioning at higher levels, and that's the reason I think some kind of dip at current levels could not be ruled out.
Okay, let's see what is sticking. Sakshi, I think there are slippages across the board. Now, profit booking is taking root in at least the index segment. Let's look at the advanced decline. At the moment, you have fairly strong sells coming on the FNO space. Let's look at the top loser here, and that's Godrej Consumer and Marico. Remember, both of them had come up with their third quarter, how should I say, sales updates for their shareholders. At the moment, a 5% cut on Godrej Consumer and a 4% cut on Marico. The prices are there in front of you, and this is accompanied by a fairly sharp surge in volume. Bank of Baroda is again weakening to 26.85, 3% lower. Then you have fairly strong and tepid moves coming in on India Cement, 1.7% lower, Ambuja Cement 1.8% lower. Let's look at the gaining side. It's the OMC pack. HPCL 431.20, 2.7% higher. IOC 1.5% higher, 134.75. And one more stock. This is based on my conversation with Ashish when I met him last in Bombay. Ashish, GMR Infra. The whole structural thought of the counter has improved since we last spoke. I think it was 47, 48 rupees. Now 85.65. Your view on the medium term prospects of GMR Infra?
So I think with a lot of improvement which is coming in the entire infrastructure and the airport space, there is a very strong trend which is getting built up in most of these names. Although from a pure fundamental perspective, we still don't have any view on GMR Infra, but from a pure technical perspective, if I look into the stock, this is a 15-year massive breakout which has happened on the charts with very, very strong volume participation. And keeping this in mind, I think now the new base from a pure technical perspective is around 77, 78 kind of trajectory. If we continue to maintain this support zone, then I think there is a very strong possibility stock will eventually cross 3-digit mark and can see somewhere around 108, 110 as a positional target from a pure price perspective. And the interesting thing, Shelji, is the kind of volume participation we are witnessing in the stock in the last couple of days. So I think keeping this in mind, this is a very, very strong breakout which has happened on a longer term chart perspective.
Okay, got that. Well, let's mark out a few stocks that are moving up in the broader markets then. Of course, Alok Industries, as pointed by Shail, already 10% higher. This stock has been up and running for the last 1 week or so, and very, very sharp moves of 50-60% coming in after Reliance Industries invested afresh via preferential shares. Godrej Industries is 6% higher. Century Textiles, that's 4% higher in trade. Easy Trip Planners 2.5% up, Amber Enterprises 2.5% up in trade. You also have stocks like Angel One that are moving up 2.5% higher in trade right now. Anything from the broader markets, Ashish, that attracts your fancy at this current levels? A lot of varied subsectors and some of the stocks from that are buzzing in trade.
So I think this entire financialization of the savings as a theme is looking very, very promising. We have been very constructive about themes like BSC and CDSL in last couple of months, and I think I continue to believe in a very strong trend which is emerging in CDSL with almost 10 crore demat accounts and with a lot of unlisted companies now. Now they have to come into the mainframe. So this gives us a sense that CDSL will continue to do very well. Stock has been consolidating for last couple of weeks in a range between almost 1950 to 1800. But my sense is once it crosses 1950, this would be a good breakout, which could eventually lead to a move towards 2200, 2250 kind of trajectory. So my top pick in this basket would be CDSL, where I think a strong base has been formed around 1800 levels.
Okay. Right. Apart from this, do you also track the life insurance majors, and is there any momentum that you would advise traders to track here, Ashish? Stocks like HDFC Life that are now picking up pace. We've been seeing SBI Life and even LIC performing better in the last week or so. But is there a considerable amount of conviction here or no?
I think, Sakshi, it's more going to be a consolidation phase, but yes, some uptick could not be ruled out. But from a momentum perspective, most of these stocks are missing that trend. So yes, they have formed a strong base. They will continue to do to trade in line with broader market. But still, I believe that most of these stocks are going to be sideways to kind of consolidation phase with positive bias. So ideally, the style in these stocks should be to buy on dips rather than buying at any kind of breakout, because the breakouts are not getting sustainable, whatever we have observed in last couple of quarters. So my sense is buy and dip would be a good strategy in stocks like SBI Life and HDFC Life.
Okay, let's look at the market in some detail, Sakshi. Nifty's given up its early gains. Now 53 points lower, 21,650. This is a crucial level. Remember, all of 28th, 29th December, as also the first 2 or 3 trading sessions of the previous week, 21,680 was something that was held by the bulls and defended very strongly. Now, on an intraday basis, this is below that one. What else is causing that pain? It's the banks. 200 points lower on the bank Nifty, 47,950 for you. Let's just pay attention to what the FNO is sending us in terms of cues. The market is now bearish. Out of the 185 futures that we track, about 142 are in the red. So that's a big negative. And remember, it's the first day of the week. It's the fairly strong selling pressure that's coming on FMCG counters. ITC now below 470. It's 468.75. Lever is down 25.80. That's weakness creeping in because of quarterly updates coming in from Godrej Consumer Products as also Marico.
Okay.
In fact, if you look at the FNO space, it's the FMCG sector that's the biggest loser. And let's look at the index as far as the FMCG index is concerned. Okay, it's the second top loser, 1.34% down, 56,901. Sakshi, what are you watching?
There's one stock, Sula Vineyards, that's up 10.5% in this kind of a weaker market, and there's a reason behind it. CLSA has come out with a report on this one, and it believes that the stock may rise 55% in the next 12 months. Of course, Maharashtra is, the Sula is the largest market is in Maharashtra, but it's been on an upward trending pattern when we look at the kind of listing that we had, and from that time until now. A substantial move is what we have witnessed on Sula Vineyards. Do you track this stock, Ashish? And 13.5%, of course, long-term historical charts are not there for you. But after the listing, the kind of move that we've seen on this one.
Sorry, Sakshi, I don't track this stock. So, just from a technical perspective, when you mentioned, I saw the charts. And yes, it's a very good breakout which has happened in the stock after consolidating for last 6 months and with a very decisive volume. So if you look at today's trading volume activity, it has already crossed 40 lakh shares, and in fact in yesterday's trading session, that is on Friday, the stock crossed almost 80 lakh shares. So this is happening at a pretty massive volume. But yes, we have already seen the move from 480 to 630. So the trend is promising, but we don't track it. But yes, one stock within this, not exactly in this space, but in the entire beverages segment, we have been tracking and we have been holding in our portfolio is Varun Beverages. And I think with the geographical expansion this company is doing, we continue to believe in the story. My sense is, again, from a technical perspective, stock has formed a good base around 1240, 1230 zone. And it looks like stock is heading towards 1400, 1450 in the immediate short to medium term time frame.
Sakshi, the point I want to make is that checking Sula Vineyards for you and Ashish Bhai makes little or no sense because none of you consume the product that they make. It's better that both of you focus on Bhikaji Foods because that is what you like. Record high on Bhikaji, and of course one of the picks that we have been tracking on behalf of Mayuresh. Ashish,
very interestingly, Shail, Bhikaji Foods we were discussing last week. It goes very well with Nestle products, like you said, with Nestle Maggi, and it also goes as a chakna with Sula Vineyards as well.
Yeah. तो अब उसको चखने की तरह इस्तेमाल नहीं करेंगे. During daytime we will use it above Maggi, and in the evening we will think of Sula Vineyards and Bhikaji Foods together. Ashish bhai, fairly strong moves coming in on the index. This is getting to be, you know what the good part is, that this downslip that is happening slowly but surely. 21,834 was the record high that we saw in last week of December, and now dip धीरे धीरे ये नीचे की तरफ move करता जा रहा है, which is fine. Nothing much to discuss. It's a sea of red across the board. Coal India we can discuss. This is one of Ashish's top picks, along with NTPC in the energy space. 389 Ashish bhai, and this is a 6-year high for Coal India. I remember a fabulous listing in 2011. The stock is yet to reclaim its all-time high. Your medium-term view on Coal India, sir?
So, Shailji, we continue to have a very positive view on both these names, NTPC and Coal India. NTPC has done fairly well, but we continue to believe that this will do reasonably well because of the 30 gigawatt addition which they are going to witness. My sense is NTPC per se stock is moving towards 350 kind of trajectory. As far and again a disclosure that we continue to hold both these names in our portfolio. And as far as Coal India is concerned, I think the stock is looking extremely strong. It has consolidated for last 5 days after moving towards 395 kind of trajectory. Now I think it has formed a strong base around 380, 382 kind of trajectory. If in the medium term, I'm expecting the stock to see somewhere around 430, 450. But positionally, my sense is, shall this stock has a potential to cross even 500 kind of trajectory in next 6 to 9 months time frame, with very strong dividend yield, and a kind of focus government is having even on thermal capacity addition because of the strong power demand we are witnessing. We have already seen the peak shortage levels moving towards 11, 12 kind gigawatt versus 2 gigawatt in 2022. So this all will lead to strong thermal capacity addition as well, and this will eventually be very, very positive for a company like Coal India. So my sense is Coal India has not participated the way most of the other power sector companies have done well in the last 6 to 9 months time frame. So that catch up rally is going to take place in Coal India as well. This is our view, and again, a disclosure, we have a biased view because we continue to hold this stock in our portfolio.
Okay. All right. Ashish, a few more stocks I will discuss with you. From the NBFC space, are you looking at stocks like, say, Shriram Transport Finance? We also had the last week when we saw Muthoot Finance, Manappuram Finance, all of them buzzing in trade as well. Is the NBFC space showing you some positive charts and any particular stocks that you're positive on from here?
Yes, so we have been, very constructive about Shriram Finance. In fact, this is one stock we continue to hold in our portfolio where we have NBFC exposure, and we think this is also from a valuation perspective. Also, this is at deep discount to its peers, trading around 1.3, 1.4 time price to book with strong, credit growth, and we expect a very strong recovery in the commercial vehicle segment. That's why we have seen Cholamandalam Finance almost hitting a fresh all-time high in the last couple of trading sessions. That's the same trend we are witnessing in Shriram Finance, and we believe that Shriram, the valuation re-rating will continue to take place, and stock will eventually move towards 2350, 2400 kind of trajectory. Apart from that, as we have already mentioned about our view about Poonawalla Fincorp, where we have seen ROAs of more than 4% and net NPA below 1%, and a strong AUM growth of more than 35 to 40% will make sure company will start getting re-rated in the markets. From a price perspective, I think stock has consolidated for last 6 months and now given a fresh breakout. So stock is moving towards 550, 560 kind of trajectory in coming few months. So Poonawalla Fincorp, Shriram Finance would be our top pick in the entire NBFC basket.
Okay. Ashifai, this is of course a rhetorical question. I am sure a lot of people are now coming to you with almost a blank check to invest in the market and suffering from this extreme, how should I say, feeling of being left out from the rally that we've seen over the last 7 odd months on the markets. What is your advice to people who are coming in at this point of time?
So two things, Shalbhai. One, a reasonable return expectation, because considering a lot of returns we have been observed in the last 9 months, and obviously massive rally coming into small and mid cap space. But I think there is going to be a sectoral shift in terms of market, with FI participation increasing in the market in days to come because of interest rate starting to come down. This will lead to a lot of this amount of money flow getting into the larger cap names. So there's going to be some kind of switch which will happen from small mid cap to large cap basket. So that's a one piece of advice. And if the portfolio is not aligned to a flexi cap kind of strategy where there's a good amount of exposure to large cap, then I think there could be some pressure which portfolios can witness. So that is one point of thing. And second is, we have to go in a staggered manner. So you can't invest all your money at current levels. Even if we are asking for money, what the strategy is to deploy the money in a staggered manner rather than all the money putting in at one go and not taking significant exposure to small and mid cap space.
Okay, ladies and gentlemen, with that, Ashish Bhai, thank you so much for this wonderful advice. And from your side, we'll keep an eye out on SGVN, Poonawalla FinCap, Cochin Shipyard, and of course GMR Infra. These are the mid caps and large caps of late. Ashish Bhai is recommending to take positional longs. Let's now wrap up the market. Thank you, Ashish Bhai. We'll be in touch all through the first week of January, and all the good luck and all the good fortune coming your way for 2024 to you, to your family, and all those people who are associated with JM Financial.
All right, let's start wrapping up the market.
Start wrapping up the market.
Yes. The Nifty is sluggish, 0.1% lower in trade, 21,675. And of course, it's the Nifty Bank that is down by about 0.5%. And with that, we have the private banks and the PSU banks lower in trade. PSU banks, the top losing index right now, sectorally speaking, 1.27% lower in trade. It's the IT index that's also down by 0.4%. Healthcare index that's down by 0.4% again. Metals that are down by about 0.5%. The mid and the small caps also declining in trade, about 0.3, 0.4% of a cut coming in for this one as well. So a lot of sectors coming up, seeing a lot of profits being taken off at the higher levels. Oil and gas, autos and realty especially, and also consumer durables. Slight ticks on the green side coming in for these four sectors right now. On the top Nifty counters as far as the gainers are concerned, you have BPCL, ONGC, Eicher Motors, Hero MotoCorp, Bharti Airtel and Coal India as the top 5 to 6 gainers on the Nifty pack. On the losing side, on the Nifty, you have stocks like UPL, Tata Consumer Products, HUL, Britannia. So the FMCG space not moving, ITC and Divis Laboratories, some of these stocks that are the top drags on the Nifty index. F&O space, a buzz with GMR Airports Infra, one of the stocks that we discussed widely, 4% high in trade. HPCL again, 3.5% up. TVS Motors, the top choice of our guests as well in this show, 2% higher for this one. Shriram Transport Finance also up by about 2.5%. So that's as far as the market first hour of trade is concerned. What we'll do is we'll wind down this edition, but don't go anywhere. There's lots to be watched out on Business Today television today. We have Market Masters at 12:30, and we will also see you at 2:30 for the market closing as well. So do stay tuned, as a lot of action follows on your screens right up next.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines and many other sectors.
In today's rapidly evolving business environment, when risk is omnipresent, managing risks is no longer just about ticking a few boxes. Businesses need to maintain a panoramic view of risks to stay ahead of the curve. Join us to explore how organizations can rethink risk to unlock new possibilities and become fit for future. At PwC presents De-Risking the Future in collaboration with Business Today.
This question is related to the new age tech stocks. This is from Bengaluru, and Revant S wants to know from you.